I think people will sometimes, they worry because, oh, well, the market's high. It's had a great run. And sometimes people will also not act because they think, I shouldn't buy now, the market's too high. How do you respond to that?
My response to that is you can't time the market, in my opinion. And the fact also, if you're a younger investor, your time horizon is so huge that whether you get in at the market high or you wait for that next dip, it's really not going to have as big of an impact as you might think. So I know, Matt, you like to talk about that a little bit on the quarterly market updates and just in terms of, I believe you said it was 3 years, right?
For anyone that is familiar with our quarterly market update, Matt's Markets on the Moves, JP Morgan does this great slide about how investing at a new high, what difference does it make over 3 months, 6 months, 9 months, year, 3 year, 5 years. And it just says that after 6 months, it literally doesn't matter. That investing at a new high, you're actually above where you would be if you did not invest at a new high. As you said, it's all about time horizon. If you have a long time horizon, if you have 3, 5+ years, which is exactly what we're talking about, don't be afraid of the highs is basically what history has told us.
Yeah, and I'd say also don't be afraid of the lows. Going back to just conversations I have every day with friends and such is they'll say, hey, Nick, I'm worried about the market right now. Should I take my money out? Should I go into bonds? And these people are late 20s, mid 30s. Personally, this is my opinion, obviously, but absolutely not, because you have to time it twice. You have to time it getting out and timing it getting it back in. And if you miss just the best couple market days, your returns are actually going to be dramatically impacted, sometimes up to half, depending on obviously the amount of money in your investments and things of that nature. So that's why it's like, get a plan in place, stay consistent. The one thing I would say though, if the market does drop, that is an opportunity to build exposure in your portfolio. Maybe make some additional contributions that month because you're buying at a lower point. But I wouldn't say worry too much about changing your investments and pulling out of the market.